Hey everyone, we are today doing a Year 12 only video. So, if you happen to be a Year 11 on this video, I mean, you can still watch it. You can do it next year, but this isn't for you. This is not your video if you're a Year 11. Anyway, for Year 12 today, we are looking at general ledgers and general journals. So, up until this point, you have done cash receipts journal, cash payments journal, purchases journal, and sales journal. We get rid of those, and instead, we use the general journal and the general ledger, and they look like so. Now, we're going to go through all of those. We're going to go from the start all the way to the trial balance. I'm going to do a mini example. This is one of those things like a lot of, essentially like a lot of accounting, it's just practice makes perfect. So let's jump into it. So on the screen in front of us, you can see I have a blank general journal and a blank general ledger. Now, earlier on in the previous video, I said all things must be equal, left equals right, and now I'm going to add a third one on there, debits equals credits. So this is especially true here because this is what we use to check that our accounts balance. And if our accounts balance, we can make a good balance sheet, income statement, and cash flow statement. So that's sort of why this is important. So let's start by looking at each journal, and when I get to the rules, I'm going to bring up actually the balance sheet, and you're going to see a little pattern here. So on the general journal, you've got date, account, debit, and credit. Meanwhile, on the general ledger, you've got the debit side. Debit's always on your left, you facing, and credit always on your right. So screen left, screen right. And I'm just going to be showing you. So anytime an asset goes up, it's a debit. Anytime a liability or an owner's equity go up, it's a credit. And that falls in line with our A equals L plus OE. It's the same principle. L and OE are credit. A is the debit. So that's where that fits in. Next, we have the revenue and expenses. So all those linking with profit, well, we treat them like owner's equity essentially. So revenue will be a credit when it goes up. Meanwhile, expenses will be a debit when it goes up because that makes owner's equity go down. Revenue makes it go up. Now, one thing I do want to point out that if, say, an asset's going down, obviously it's a credit. It's likewise for liability, owner's equity, and so on. So just keep that in mind. Obviously, if I haven't mentioned it, it means the opposite's true. And if it goes down, it's the other side. And this is one of those, this is where practice makes perfect. And this is one, especially at this time of the year, especially if you're watching this video, it'll be very early in term one. You just take it slow. You don't need to rush. So that's just a bit of a mindful idea there. So let's jump into the example. I think the example will clear things up, hopefully. I've got two transactions here. The first transaction is the capital contribution of $2,000 cash. This is a capital contribution from the owner, obviously. And that's receipt 1. And the 8th, there was a purchase for a second-hand car worth $1,500 for short deliveries. That is check 1. So, how do we make this? So what we do is, and I'm going to bring up the solution now. You can see transaction 1, bank, because it goes up, because we receive cash, it goes up, and the owner's share in the business goes up, that's the credit, and you see both debit, credit, 2,000 there. And if I also do this transaction, I'd make sure that debit and credit are both 2,000 before I move on. Now, bolded underneath is the annotation or narration. The narration is, for me, the narration is something you only include when specified. It is a good practice to, especially in earlier chapters, to do it. although the way books are constructed, there isn't much space. So even if you want to do it on like the last transaction of an exercise, that's still a good little habit. But anyway, so I've done the narrations here. Owner contributed $2,000 to the business, and brackets the source document. So for you, it is, here's what the transaction is, here's your source document. And on the 8th of January, you can see the business purchased a car. So car goes up 1,500 and the bank goes down. That asset goes down, and that's a credit. And that's 1,500. And again, another narration with the source document always in brackets. Always put your source document in brackets because that helps with verifiability. All right, so how do we link our ledgers? How do we link those to what we do here? We need to link them. Well, quite simply, I'm going to bring up the bank one because the bank one's that busy. And then below it, I'm going to have the capital and the car in a moment. But firstly, the bank, we can see on the 1st of Jan, and I did add this on the capital and the bank, I added an opening balance of 15,000. So that means it goes from Jan 1, it goes from 0 up to its starting balance of 15,000. You can then see on the 1st underneath, so I didn't need to write a new date, that capital went up by 2,000. How does this line up with what we've written in the general journal compared to the general ledger? So let's have a look. You can see in the general journal, I've written 2,000 as a debit. So what happens is I read across. I go, account name I look at is bank, and you see bank there. Okay, I need to put $2,000 in the debit, so I go to the debit side of my bank account. In the amount, I put 2,000, and then the cross-reference is the other account. And if there are two, you write both of them. So if it was capital and GST, for example, I'll go capital / GST clearing. You write both accounts. And this is a bit of a touch. This is a bit of a practice thing. You get used to doing it. You know what to look for. But it's just making sure that you can cross-reference. So looking at that ledger, what I can do now is I see capital 2,000. Now, if I go to the capital account, which I'll bring up now, I can see 1st of Jan, bank 2,000 on the credit side. So your debits is 2,000, your credits is 2,000. And if you have a look at the general journal and we do the same method of capital, credit side 2,000, and the cross-reference will be bank, we see that information's all there. And it's so you can tick off items against each other. Make sure you've put the whole transaction in. And likewise, we can observe the same in the car, where this time bank's a debit. So if we look at bank, debit 1,500, cross-reference car on the 8th of Jan. And then we go to the car account, we see on the debit side that same transaction. So you see both of them there straight away. That's how that all works. That's how everything ties together. That's how you put your general journal into your general ledger. But what about if we want to know the balances? What do we do if we want to see our balances? We get two options. We get footing, which is a lot less common and is sort of a running balance, or the alternative and more common balance, common words are hard, more common method is balancing. I'm going to show you both. Firstly, footing. So I've got three accounts here. I've got the bank, capital, and car. And we can see I have deducted the debits from the credits, and whichever side's bigger, I've put the difference in. So in the bank, we can see debits is bigger by 15,500. So I've put that in the debits, and I've drawn a circle around it. That is all you need to do. That is it. Nothing more, nothing less. Likewise for capital, on the credit side, 17,000, and the car, 1,500. And we can see that those are the running balances for each of those accounts. Now, let's do the more common balancing. So what we do for balancing, we'll use the bank account, and I'll talk you through that. We add up both sides, and we see that automatically the debit side will be bigger because that's got the more completed transactions. So 17,000 on the debit side. Now debits need to equal credit, so that 17,000 needs to go across to the credit side, but it doesn't add up to 17,000 because car's only 1,500, and we see we've got balance 15,500. That is your closing balance. That's what we do at the end of every month, and that helps us with our trial balance, and that helps us tell us, hey, this is what this asset is worth, or this is what this loan is worth. And we can see here that on the 31st of Jan, you only need to write the month on the top line. We had a balance of 15,500, and the day after, so close of business 31st to 1st of Feb, we see balance 15,500 because you assume no transactions happen overnight and you record them in the morning. And then the same things happened for capital, where you see the balance 17,000 on the debit side carries over onto the credit side. Likewise, the car is carrying over from the credit to the debit, 1,500. So that's how that all interlinks. That's how that all looks. That's your balancing. You need to get good at that school and that skill. That's why you need to know debits equal credits. That's why debits equals credits underpins everything we do. So let's wrap this up. Let's do the trial balance. The trial balance is a summary of every account we have. So you can see here, if we look at the previous balances, we see, bank debit 15,500, card debit 1,500, and capital credit 17,000. You write the balances in each, and you can get that from footing or balancing, either or. But we total them and we see 17,000 on both sides. That means the true transactions we put in, we did correctly. Now, you're going to get a theory question, potentially. What do we use the trial balance for? So the trial balance is used to help us create reports, but it's also a cross-checking mechanism to make sure that we've put the transactions in correctly. So for example, if I left off 1,000 on the car and it's only 500, that's going to show up in the trial balance because it helps us essentially find errors. Have we made an error? Does something not add up? So if that doesn't add up, I know to go back and look at my transactions one by one. Maybe it's a math error. Maybe I've made an adding error. But those are all why the trial balance exists. But there's one way the trial balance falls short. It does not pick up errors if both numbers are wrong. So for example, for the car, if I wrote $1,000 or $500 on the bank and the car account, so I'll bring that up now. If I wrote 500 instead of 1,500, because both numbers are wrong, the trial balance does not pick this up because the trial balance is still going to add up, and subsequently my balance sheet should still add up. So that's just a little reminder there. So a quick summary, some rules around your general journal, general ledger transactions. Do one at a time, make sure it adds up, do your trial balance, and you're going to be more likely to do balancing. So please remember, one at a time. Make sure you got that first transaction right and then move on. It's just safer that way, and you're going to make your life a lot easier. Until next time, check out the rest of the channel. We're making more videos all the time. Share with friends, tell people if they do accounting and they're at different schools. Show them, hey, look, this is what my teacher does. Be proud of it. Anyway, on that note, I will see you next time.